I am Jeremiah Ajuda Dusu, the author of JAD's Business and Financial Accounting. Everybody move your body now. Hello, good to see you again today. All right, let's not waste time. Let's quickly move forward. Remember, we are still on group balance sheet, that's consolidated balance sheet, okay? So moving forward, okay? Today, we are looking at another aspect of it. We're still on group or consolidated balance sheet. Today we're looking at okay. So what we're looking at today is group balance sheet involving fellow subsidiaries. Okay. All right. This is not something that is very difficult. Okay. So what we're saying here is that a holding company has direct investment, of course, controlling investment in more than one subsidiary. So let's say we have A Limited, right? Okay, this is the parent company, or what you call the holding company. All right, and then let's say we have B Limited, that's subsidiary. And then we also have C Limited, another word, subsidiary. Okay, so let's say subsidiary A, subsidiary what? B. Or let's say subsidiary 1, subsidiary what? 2, whichever one you want to choose. So what I'm trying to make you understand here is that A Limited is the parent company, B is subsidiary, C is subsidiary. So A Limited has controlling interest in B Limited. It also has controlling interest in what? C Limited. So we can conclude that B and C are fellow subsidiaries. They are subsidiaries and co, right? So we can just simply say A Limited, of course, is controlling what? B Limited, and is controlling C what? Limited. So let's say A Limited has a controlling interest of, let's say, 70% in B Limited, and also has what? Controlling interest, let's say 80% in C Limited. So A Limited is what? The parent company. B Limited is what? A subsidiary 1, and this is a subsidiary what? 2. So what we're saying is that B Limited and C Limited, B Limited and what? C Limited are what? Fellow subsidiaries. So what we're saying is, instead of A Limited having just one subsidiary, it has 2 or more subsidiaries. So you're going to have to consolidate, the balance sheet of A Limited with that of B Limited and C Limited. So if it has other subsidiaries like maybe D Limited and Co, you have to put them all together. So what we're saying that all the subsidiaries directly under A Limited are what? Fellow subsidiaries, or should we say they are co-subsidiaries, right? So they are co-subsidiaries or fellow what? Subsidiaries. So what we're saying is that, let's say co-subsidiaries, right? So what we're saying here is that B Limited and C Limited are both subsidiaries to what? A Limited. So A Limited has a direct investment controlling B and also controlling C. So if it has more, let's say it has D Limited, let's say 65% in D Limited, of course, B, C, and D are what? Fellow subsidiaries. If it has another one again, say E Limited, let's say it has 68% in E Limited. So that means B, C, D, and E Limited are what? Fellow subsidiaries. So it's the same principle when you're having one subsidiary. The same principle applies when you have more than one subsidiaries. That's directly, okay? So it means that you're going to have, at every point, you're going to have, pre-acquisition reserves at each point based on the relationship between A Limited and B Limited. You have post-acquisition reserve as well. Between A and C, you have pre, you have post. Between A and B, you have pre, you have post. Between A and what? E, you have pre, you have post. So at the end of the day, you're going to have, of course, net asset acquired between A and B, between A and C, between A and D, between A and what? E. So you're probably going to have, you're going to have goodwill as well based on the relationship between them. There will be a goodwill based on the what? Acquisition of B by A. There will be a goodwill based on the acquisition of C by A. There will be a goodwill based on the acquisition of what? D by A. There will be a goodwill based on the acquisition of what? E by what? A. So at the end of the day, you have to know the what? The goodwill position. When you what? Bring all together into one what? Balance sheet. So it's the same principle when you have one subsidiary. The same principle applies when you have what? More than one what? Subsidiaries. Of course, there are adjustments. You adjust accordingly based on the what? The relation between the what? Holding company or whichever company the adjustment is affecting in the what? In the consolidation. Okay, so it's the same principle. If you have loan within them, you have unrealized revenue within them, you have to just know, the companies that have been affected within the consolidation, and then you adjust accordingly. Okay, so it's the same principle you're going to what? Apply. So, if you've been following us, I've taught various classes on group balance sheet or consolidated balance sheet. So all the principles that are applied in various adjustments, various scenarios, the same thing will apply. But before now, the scenarios we've been looking at is where the holding company has just one subsidiary. But now the holding company is having more than one subsidiaries. So it's the same principle. You have to know what is relation between, in terms of investment, of course, between holding company and what? Subsidiary one. The relation between holding company and subsidiary two. So you have to know that, and then prepare the consolidations what? Accordingly. It's the same principles, no different. Okay, so if you have any questions, you can reach me on the numbers displayed. I'm going to reply with the right answer. So let's quickly, take a question on consolidation schedule and consider balance sheet, so you understand what I'm talking about. All right, let's quickly take this question so you understand what we're talking about here. So they said, the following represent the balance sheet of Kings Limited, Queens Limited, and Ponds Limited at the February 2018. So we have what do we have there? We have Kings, we have Queens. Okay, we have Ponds. These are the assets. These are the liabilities there. So you can see them there. Land and building, furniture and furniture, debtors, investment in Queens, investment in Ponds. We have the cash at bank. Then we have the share capital reserve. Additional information now. Kings Limited acquired 80% shares in Queens Limited on the 31st December 2016 when its reserves was 5 million. Kings Limited acquired 7% shares in Ponds Limited on 31st December 2017 when its reserve was 8 million. Very straightforward question. You're required to prepare the what? Consolidation schedule and the consolidated statement of positions at 2018. So this is very straight question. So we have these are consolidation schedule. Okay, so we have costs of control. We have kings in queens. Kings in Queens. They said kings acquired 80% shares in queens. So this is 80%. We have under cost of control, kings in pawns. They said kings acquired 70% shares in Pawns Limited. That's 70%. We have cost of control here. Kings in queens, 80%. And then we have minority interest here. So based on kings and queens, we have 20%. Based on kings and pawns, we have 30%. So we have consolidated with P and with L. Okay. All right, so let's go. What's the first person there? We have queens. So we say what? Queens. What's the share capital of what? Queens. According to the question, the share capital of queens here is 100,000. You have 100,000. So 80% of 100,000 here is 80,000. 20%, of course, here will be what? 20,000. So we have reserve. What's the reserve for queens? Reserve for queens here is 30,000. 30,000. Okay, so what do we have here? So for queens, reserve is what? 30,000. Then we have pre and then we have post. What's the pre? They said as at when it was acquired, we have 5 million. So pre is 5 million. Post will now be what? 25 million. So this is the post here. So that means you're going to have 0.8 times this, 0.8 times this, then 0.2 times this. So 0.8 times 5,000, what do you have? $4,000. So we have 4,000 here. Minority interest, of course, we know that 0.2 times 30,000, 6,000. So consolidated P and L will be what? Post now, 0.8 times 25, 20,000. So the next one now will be pawn. Share capital of pawns according to the question, 150,000. So we have what? 70% of this. What do you have there? $105. So we have 105,000. 30% is how much? $45,000. So what's our reserve? Reserve here was 30,000. Reserve here is how much? 40,000. So this is ponds. Reserve is 40,000. So we have pre, we have post. So when it was acquired, it was what? 8 million. So we have 8,000. 40 minus this, I think that's 32,000. That will be 0.7 times this, 0.7 times this, then this will be times 0.3. So let's go. 0.7 times what? 8 million. That's 5,600. So 0.7 times 32.
Daddy, touching me.
22,400. Okay. So what do we have now? For minority interest, that will be 0.3 times how much there? 40,000. That's 12,000. So if you add all, it should give you 40. Okay? 5,600 plus 12,000 plus 22,400. That's it. So let's go. So we have net asset acquired. This is 84,000. So this is 105,006,011. This is 110,600. So what's our investment? So what is investment of K in Q? 100,000. So we have 100,000 here. What's the investment of K in P? 120,000. So this, of course, is our goodwill. So we have 100,000 minus what? 84,000. 16,000. What about this? We have 120,000 minus 110,600. 9,400. Right? So we transfer. Let's transfer it. Take this one out. Bring it here. So what's all our goodwill? This will be that. So that will be 16,000 plus 9,004. 25,400. We have 25,400. Okay. So what's our minority interest now? What's our minority interest? So we understand what I've done here though. Okay. Let's put sheet somewhere here. So we have our queens. Okay, what do we have? 30,000. This is 5,000. This is 25,000. So this is 0.8 times this. 0.8 times this times 2. So we have our points. 40,000. This is 8,000. This is 32,000. 1.7 times 0. Okay. So we can take this off. Alright. Let's move. So what's our minority interest? That will be addition of all this. We have 20,000 plus 6,000 plus 45,000 plus 12,000, 83,000. This is 3,000. So what are case reserve now? King's reserve, according to the question, King's reserve is 165. Yes, we have 165. So we add up this plus this plus this, you get the consolidated P&L. So what do we have? $20,000 plus 22,400 plus 165,000, 207,400, 207. So that is it for the consolidated schedule. So what we've done here basically is to prepare the consolidated schedule based on the holding company and its fellow subsidiaries. So we have two fellows here, Queens and Pawns. So Kings has 80% in Queens, 70% in Pawns. So this is the distribution. And then this is what we arrived at. So after this, of course, we prepare the what? Consolidated what? Balance sheet or statement of financial position. So we say Kings and its what? Subsidiaries. So we say what? Statement of what? Financial position as at 31st December 2018. So we have notes here. These are our assets. So let's say non-current, note 1. So let's put note 1 here. So what are the non-current, the fixed asset items, like non-current asset items? So what do we have? We have land and building. So what do we have? We have 80, 52, 85. 80,000, 52,000, 85,000. Okay? So what do we have there? $80,000 plus 52,000 plus 85,000, 217,000. So we have 217,000. What's the next one? Furniture and fittings. We have 40, 25, 30. 40,000, 25,000, 30,000. So what do we have? 40,000 plus 25,000 plus 30,000. 95,000. What's the next one there? That's all. So you add up this, what do we have? 217,000 plus 95,000. 312,000. So we have 312,000. So current, that's 2. So what are the current items here? Of course, what we've done here is simple. We have only added the non-current asset items or the fixed asset items of the holding company, Coins Limited and Cons Limited. Okay, so let's go. Debtors. What do we have? 30, 16, 23. 30,000, 16,000, 23,000. So what do we have? We add up. 30,000 plus 16,000 plus 23,000. 69. So what's the next item? Bank. So what do we have in bank there? 45, 37, 45,000, 37,000, 52,000. 134, because we have 45 plus 37,000 plus 52,000. So what do we have? 134. So let's add up 69,000 plus 134. 203,000. So we have 203,000. So what are our goodwill here? Our goodwill is 25,400. 25,400. Okay. So what exactly is our total assets? So that'll be 312,000. Because what we did here is to add up the current asset items of the holding company and the subsidiaries, which is Queens and Pawns. Okay. So let's go. We have the 3. When you add up all this, so 203 is the current asset. This one is goodwill from the schedule. So what do we have? We add up 312,000 plus 203,000 plus 25,400, 540,400. 540,400. So let's go. Liabilities now. What's our reserve? Our reserve here is 207,400. What's our share capital of the holding company? What do you have? 250,000. So we have minority interest. What do we have? 83,000. So let's add up. What do we have? This reserve here is the CPL position here. The share capital is the holding company share capital. Another interest is for the schedule here. So what do we have? 207,400 plus 250,000 plus 83,000. 540,400. So this is your total liabilities. So you can see that total assets is 540,400, total liabilities of 540,400. So this is the consolidated what? Balance sheet of Kings and its subsidiaries. Of course, King has fellow subsidiaries, which is Queens and what? Pawns. Okay? So what we've just done here is to consolidate, with what? Fellow subsidiaries. So the holding company has more than one subsidiaries, more than one direct control in the what? Of course, has a direct investment in more than one subsidiaries. Okay? So take your time, go through it. If you have questions, you can read the numbers displayed. I'll be able to reply with the right answers. Don't forget you can support us by printing account numbers displayed or sponsor copies of my textbook for free distribution to students. Thank you. See you in the next class.